In a world of twisted facts, alternative narratives, corrupted corporations, and hacked feeds, how can we decipher the difference between truth and fiction? It's time to take back the truth. Read Robert Kiyosaki's Fake and learn the signs to recognize fake money, fake teachers, and fake assets. Determine what's real in a world where falsehoods are a weapon. Don't let fake advice destroy your financial future. Visit therealkiyosaki.com to read Fake by Robert Kiyosaki. That's therealkiyosaki.com.
This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Hello. This is Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. This show is about possibly the biggest bank heist in history. It was perpetrated by a 25-year-old guy from Malaysia. And this was just recently. And it's one of the most interesting stories in modern history. I mean, there's always bank heists going on. You know, people always stealing stuff. But this one is massive. So the question I have for you is, while you're sitting at work, you ever wonder what's really going on? You know, why are the really, really rich getting really, really richer? So this is a fascinating story. It's still unfolding. This is a 25-year-old Chinese kid from Malaysia, and it's about how he ripped off billions of dollars. Just his charm. Any comments there, Kim?
Well, this is such a wild story, and we have the author, one of the co-authors, with us today. And you can't make this stuff up. This I'm sure this will turn into a movie somewhere down the road, because Hollywood was very involved in this story. It was the name of the book is called $1 Billion Whale: The Man Who Fooled Wall Street, Hollywood, and the World. And we're talking billions, not millions, billions of dollars. And our guest today is Tom Wright. Tom is a Hong Kong-based journalist with the Wall Street Journal. And in 2011, he was one of the first journalists to arrive at the scene of the raid in which the Navy SEALs killed Osama bin Laden. He's a Pulitzer finalist and a Loeb winner. And I want to just welcome you to the show, Tom.
Hello, it's great to be here.
Great to have you here.
Thank you, Tom. Give us a thumbnail sketch of this guy. His name is not J-Lo, but Jolo. He's a Chinese kid. He's 25 years old, rich kid, but obviously very gifted and understand the international banking system. I mean, this is where the really, really rich get even really, really richer. So tell us what you know about, in the thumbnail, what happened.
What is the $1 Billion Whale?
Well, the $1 Billion Whale is Joe Low, as you said, and he was, as you said, he's in his late 20s. He'd studied at Wharton, came from a fairly wealthy family from Malaysia, but certainly not billionaires. You know, they had maybe had a few million. Son had gone to Harrow, the UK boarding school, and then Wharton, where he knocked up against very rich Arab families. And he sort of intuitively was one of the best networkers the world has ever seen. He knew how to meet people and work out how they could help him and how he could help them, and sort of put himself between people. And so he got to know all these rich Kuwaiti and Persian Gulf families. And then when he graduated Wharton, he went back to Malaysia, and he told the then Deputy Prime Minister Najib Razak and his wife, Rosma Mansour, who were this sort of power couple in Malaysia, that he could help bring Middle East money. Now, at this time, this is 2005, there was the beginning of this sovereign wealth boom, and oil-funded sovereign wealth. And Jolo had seen through his friends in the Middle East how these powerful Middle East funds were deploying money and buying Western companies, and they were run by a very powerful super elite. And he wanted to do the same thing in Malaysia. So he started off by getting Mubadala, a fund in the Middle East, to invest in Malaysia, and won the trust of this Malaysian power couple. And then Najib and Rosma, Najib became the prime minister of Malaysia. And Jolo, ridiculously, persuaded Najib, to allow Jolo to run a sovereign wealth fund from behind the scenes. And by that time, he was only 27 years old. Now, that's as if a 27-year-old who has never worked anywhere and graduated Wharton was running CalPERS, or one of your big funds in America.
So a sovereign wealth fund is a fund that run by the government. Is that correct?
Correct. The sovereign wealth fund typically will invest money that the government has and try to make returns with it and be quite conservative to save it for future generations. That's what CalPERS does. That's what the Norway Oil Fund does. That's what Texas school funds will do, so that you can pay pensions. But what Jolo did, and what the Middle East funds had done, was this was now sort of, we've gone forward from 2005. We're after the financial crisis, and interest rates are super low in America, and everyone's looking to invest. Big funds, big mutual funds are looking to put money somewhere to eke out a return. And so Jolo, 1MDB, the fund that he set up, raises money on global markets rather than investing any money that they already had. And they go to Goldman Sachs to do so. And Goldman Sachs helps the fund raise $6.5 billion in 2012 and 13. And Jolo just proceeds to steal half of it, sending the money into a wave of offshore funds through the Cayman Islands. And he uses the money, and this is the really incredible part of the story, to become a Hollywood power player. He uses it to get close to Leonardo DiCaprio, whom he offers $400 million in film financing to make films. He gets close to Paris Hilton, Miranda Kerr, whom he dates.
Can I back up for a second, Tom? How in the world did he persuade Goldman Sachs to invest $6.5 billion?
Well, Goldman didn't invest. Goldman helped them raise the money.
Okay, raise it from investors.
So yes.
Okay.
And Goldman Sachs made so typically if you're a bank and you help a fund raise money or a government raise money, you will make maybe $1 million. It's not a very difficult or risky business. But in this case, Jolo had gotten to know this Goldman banker called Tim Leissner, who was a partner for Goldman in Asia. And Goldman, they didn't want to raise the money in a public way. Now, in retrospect, that was because they were going to steal it. But at the time, they said, well, we want to do a private placement. And Goldman actually bought all the bonds itself before selling them on to the public. And they charged a very high interest rate to do so, 10% or so. And so they made $600 million. And suddenly, Goldman is one of its Malaysia is one of Goldman's biggest profit centers anywhere in the world.
$600 million. What would be a typical fee for that?
1%. You would make 1 million if about around a million.
1 million, and they made $600 million.
They made 200 times.
Oh my gosh!
They did 3 bonds, and they made around 200 times what they should have done. Now that was a internal red flag. There was dissension inside Goldman. There were the president of their Asian business, a guy called David Ryan, said, "Look, I mean, we shouldn't be charging this much." It was called inside Goldman monetizing the state. I mentioned there was so much sovereign wealth around. And after the crisis, you've got the subprime crisis, the market collapse, much greater regulation of American banks at that time, right? After the subprime crisis, so going out and doing business with these sovereign wealth funds that weren't particularly sophisticated and charging huge fees was a great way of making money for Wall Street.
So, what are you saying about Goldman?
Well, I mean, we need to be very careful about what we're saying about Goldman. I mean, they are now the Department of Justice is investigating this whole scandal.
But isn't it true that Goldman has more central bankers throughout the world than any other banker?
Yes, they're obviously very entwined with power.
Everything.
And at the time when Lloyd Blankfein took over, obviously Hank Paulson left and joined the government.
And Hank Paulson at that time was Secretary of the Treasury. He was a Goldman CEO.
Correct. But I think, just going back to what are we saying about Goldman, so this is still the focus of a Department of Justice investigation, and I think for sure Goldman missed red flags. One of them being, why was this sovereign wealth fund willing to pay so much money to Goldman to secretly do the secret raising of money? It could have just done it on public markets. And then there were lots of other red flags. For example, after they raised the money they at the fund, the 1MDB fund that Jolo was running from behind the scenes, asked for it to be deposited into a Swiss bank account. What sovereign wealth fund would use a Swiss bank account?
If it's supposed to be the country's fund, right?
Correct.
Oh,
why would CalPERS or any other big fund in America use a Swiss bank account? You use a Swiss bank account when you want to hide your money from the tax man. right? So there were a lot of red flags, and Goldman's banker lawyer at Linklaters in Singapore actually at the time said, look, are you sure that you raised this money for this fund, you should be putting it into a Swiss bank account? So there's all those red flags for which they could be fined a lot of money under the Bank Secrecy Act in America, the same act that was used to fine J.P. Morgan when it failed to recognize what Bernie Madoff was up to. Bernie Madoff had his accounts at J.P. Morgan. So there's that. But then there's also this banker, Tim Leissner, who was partner at Goldman and the lead banker on this deal, who was very close to Joe Low and left Goldman in 2016, subsequently helped Joe Low to try to buy a bank in Mauritius, and he is in plea deal talks with the Department of Justice.
As we speak.
As we speak, which means that, we don't know what the outcome is, but it looks like he's going to plead guilty to something, or he's cooperating with them, perhaps.
It must have taken you a long time to get all the little pieces together to write, was it $1 Billion Whale?
Yes, it was an insanely difficult story. It started in 2015 with a leak of information from Malaysia about the Prime Minister of Malaysia, Najib Razak. He had received $681 million into his private bank account from this fund.
If I could add something.
Into his personal account.
Yes.
Yeah, I was in Malaysia when that all was busting out. People were protesting and all this. And my promoters over there in Kuala Lumpur in Malaysia said, don't say anything. Don't say anything. Of course I did. But as we all know, a few years later, some prostitute gets killed and some prosecutor get killed. It was pretty intense in Malaysia, for that time.
A prosecutor gets killed. The prostitute got killed a few years earlier. But yeah, a prosecutor who was involved in... So what happened was some investigators in Malaysia, who I can't name because of, to keep them safe, had been looking into the Prime Minister and realized that he was taking all of this money from the fund. This was Jolo was paying... This is how Jolo had to pay him to be able to run the fund without any oversight and use it for Hollywood. He also had to pay off his political master in Malaysia, right now.
For those who may not know this, was that the Wolf of Wall Street, which is an appropriate movie to promote, the Wolf of Wall Street with DiCaprio was one of the things they funded. And apparently DiCaprio was tired of working with the big studios, and by Joe Low giving him money, he was now free of the studio. Is that why DiCaprio got sucked in?
Yes, I should have. When I was mentioning earlier about that Joe Low went on to build this Hollywood empire, he like I said, he was very good at sensing what people wanted and how he could provide that. And what DiCaprio wanted in 2009 was to make The Wolf of Wall Street. He'd been involved in a bidding war with Brad Pitt for the book, which had been written by Jordan Belfort, the original Wolf of Wall Street, the penny stock fraudster, and Warner Brothers were going to make it. But after a few years of development, and I think Scorsese had already annotated the script, they pulled the plug because they thought it was too racy. It wouldn't be able to hit a broad audience. And so I think Scorsese was frustrated. And Jolo comes along and he says, I've got all this money. And they had really it wasn't like a big studio. You could just have the money, you just make the film. And so it was very attractive to DiCaprio and Scorsese.
Yeah, FYI, so when I was in Malaysia, the people of Malaysia, they're very great, great people, beautiful country. But they were so excited. They're now part of Hollywood. Then the whole thing blows up on them.
Well, I mean, nobody really knew about the Malaysia connection. Jolo never did anything. He never sort of acted like a mogul in the limelight. All of this was from behind the scenes. So there was rumors in Malaysia that this was, the actual front man of the company that made The Wolf of Wall Street was the stepson of the Prime Minister of Malaysia, and another American guy called Joey McFarland, who were the co-founders of the company. But Jolo was always in the background and arranging the financing.
So going back to Wall Street for just a moment, Tom, in the U.S. we're told since the Great Recession that Wall Street's going through all this reform and regulation and things are getting tighter and there's more accountability. Is there?
Well, this is the one question that we ask at sort of towards the end of the book in a chapter called White Collar Crime. Obviously no banker went to jail for after the global financial crisis.
No.
I think maybe one banker did. I see differing accounts of this. There was a Credit Suisse banker maybe, but really no senior executive went to jail. And so the question here is, does anyone from Goldman get sanctioned? There have been some arrests already and sentencing in Singapore of executives who were with the Swiss bank that I mentioned earlier that took the money. Jolo basically took over this Swiss bank called BSI, and all the executives were working for him, and a couple of executives from that bank in Singapore went to jail. But in general, in the last 10 years since the crisis, the rule has been that, white-collar crime doesn't lead to jail time. It leads to deferred prosecution agreements, where banks, pay a lot of money for their misdeeds.
Or like Gary Cohn, who, went to the White House as Trump's advisor.
He was Goldman.
Yeah.
Yeah, and Gary Cohn, played a fairly large role in this. I mean, he wasn't the guy on the ground, obviously. He was president of Goldman, very high-level executive. But he was this program inside Goldman informally called monetizing the state was his thing. And this was, the idea that there were these big pools of sovereign wealth, and Goldman could go and co-invest with them, could advise them, could help them raise money, like they did in this case in Malaysia. So
and that's done all over the world. Every state has these guys in there.
Yeah, and every bank was doing this. Every bank was doing this. It's
standard operating procedure for these banks.
Yeah, and Cohen. When there was pushback inside Goldman about lowering the costs, the fees they were charging the Malaysian fund, Cohen was supportive of keeping them where they were. So,
and he advised Mr. Trump.
That was subsequent. I mean,
yeah, I know, but that's
yes, you're right.
That's what we're trying to talk about here, ladies and gentlemen. While you're at work, trying to pay some taxes, and struggle along to save a few bucks. There's a whole nother game being played that nobody ever sees. I'm coming out with a book called Fake. And this book, Fake, was triggered back in 1983 when my teacher, a man named Buckminster Fuller, wrote a book called The Grunch of Giants. It was how the real game of money is played way outside our realm of reality. And the thing that's kind of exciting is it's coming, more and more it's coming to the surface every day now. So watch my book, Fake. Hey, when we come back, Tom, we're going to talk about more on the how do you protect yourself from this in this world where there's so much. It's not just corruption; it is sanctioned corruption
and so much greed.
So much, like the New York Times just came out with that whole section on what happened after Lehman crashed, and they had the whole back page is this blank page. It says how many people went to jail. It was blank. Maybe for blank fine of Goldman. But anyway, it was blank. Nobody goes to jail for this stuff. And that's one of the reasons the Rich Dad Company was formed, because if you read, Edward Griffin's book, The Creature from Jekyll Island, the name of the game in banking is you steal as much as you can, and when you get caught, nothing happens. We'll be right back.
You're listening to the Rich Dad Radio Show with Robert Kiyosaki.
Don't be like Charlie. Charlie is that do-it-yourselfer who does himself in. Do-it-yourself is good for tile and grout. It is not good for asset protection. Charlie thought he'd save a few dollars forming his LLC online. With no guidance, he did it wrong. When he sold the property, he lost thousands and thousands of dollars. He did himself in by trying to do it himself. Don't burn yourself. Use Corporate Direct to set up and maintain your LLCs and corporations. Corporate Direct is owned and operated by attorney and Rich Dad advisor Garrett Sutton. Garrett wrote the bestsellers Loopholes of Real Estate and Start Your Own Corporation. He is Robert Kiyosaki's attorney for asset protection. He and his team will do it right. Visit them at corporatedirect.com or call 800-600-1760. Mention Rich Dad and receive $100 off your formation fee. That's corporatedirect.com. corporatedirect.com.
Log on to richdadradio.com while you listen. Now back to Robert Kiyosaki.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And you can listen to the Rich Dad Radio program anytime, anywhere on your schedule on iTunes or Android. And all of our programs are archived at richdadradio.com. We archive them for one reason, so that you can listen to them again, because repetition is how we learn best. If you listen to this program one more time, you might have some ideas how you can become the biggest bank robber in history. But that's what we're talking about today. How did a 25, 27-year-old Chinese kid from Malaysia. How in the world did he rip off the world in billions of dollars? A 27-year-old kid. How does he date Paris Hilton and all those Lindsay Lohan? How does he throw the biggest parties? How does Jamie Foxx become his great friend? How does he pal around with Leonardo DiCaprio? How does he do all of this stuff at 27 years old? And this case is ongoing right now. So if you want some ideas, but it's not really about a bank robbery. It's about the fragile or the corrupt international banking system where billions of dollars are flowing every day at the same time you're at your office trying to hope for a pay raise. If you think about that. So our guest today is Mr. Tom Wright. He's a Hong Kong-based journalist for the Wall Street Journal. In 2011, he was one of the first journalists to arrive at the scene of the raid of Navy SEALs that killed Osama bin Laden. He's a Pulitzer Prize finalist and Loeb winner. And his book is The $1 Billion Whale, The Man Who Fooled Wall Street, Hollywood, and the world at 27 years old. It just shows you how much money is flowing around the world today that people don't even know what's going.
And some of that money might be your money. Some of that money could be if you're invested in with Goldman Sachs and some of these other big companies. Do you really know where your money's going? Is the question I'd like to know. If you are investing, do you know where that money's going? So, Tom, question: where is our infamous J-Lo today? What's happening?
Jolo.
Jolo. Well, I actually quite like the mispronunciation of J-Lo because it brings to mind Jay Gatsby.
Yes.
And he is really a Gatsby-like figure, right? We have a chapter called "The Asian Great Gatsby" in $1 Billion Whale.
Right, but you should see the pictures of him. He's a fat little Asian guy like me.
Well, he doesn't look like Leonardo DiCaprio. He was called the Gatsby at Wharton because he would throw these huge parties in Shampoo nightclub in Wharton in Philadelphia, and no one really knew who he was, where his money came from. So he's always had this mysterious sort of image, and that continued until 2012, where he threw this party in Las Vegas, and Robin Leach, the veteran nightlife watcher,
Lifestyles of the Rich and Famous.
Yeah, exactly. Lifestyles of the Rich and Famous attended this party. Now, Robin Leach was confused because Robin Leach had been used to covering celebrities who wanted their parties and spending to be in the pages of newspapers. Jolo invited Robin Leach, but told him, we can't write about this because obviously all the money was stolen. And Robin Leach, this is the prologue of our book, this party, and it was excerpted in the Wall Street Journal just last weekend.
Well, can I say something? You know, I'm one of those kids who was never invited to the parties. You know, all my friends are invited to parties and stuff like this. I was never invited.
I think Jolo might have been like that a bit earlier.
That's why he and I are very close, kindred spirits here.
Yeah, right.
But I tell you,
have you ever thrown a party like this one? I mean, this party, it involved like a lot off of the Vegas Strip, and Robin Leach said that there were more celebrities there than at any time bar the Oscars. You know, DiCaprio was on stage rapping. Britney Spears burst out of a birthday cake. Kim Kardashian was there.
What year was this?
This was 2012. This is really like, this is what we call...
And Kim, you and I were not invited. We weren't invited. We were not invited,
no.
No, this is peak, we call it peak Jolo. You know, this is when he's done all of the... And they're about to start filming The Wolf of Wall Street.
Okay.
He's done all of the things. But you actually started by asking me, where is he now? So that was peak Jolo. Then in 2015, when we broke the stories about him, he was banished overseas by his protector, the Malaysian Prime Minister, because there were all these questions at home about who is this guy and has he taken all this money. And he goes to China. He's an ethnic Chinese Malaysian. He goes to China where he starts to do deals with Chinese state-owned companies to invest in Malaysia. Now, his protector, the Malaysian Prime Minister, is still in power, and so they do these deals, and it appears that those deals were padded, meaning that the Chinese state-owned companies were overpaid to build infrastructure in Malaysia, and that more money was taken, and that this was some kind of attempt to fill the holes from the earlier frauds that had gone on. And as far as we know, he is still in China. The Malaysian Prime Minister, his protector, Najib, lost power in May in an election in Malaysia.
That was big news.
This year,
big news with my friends out there.
Huge news because Malaysia is, like many countries in the world, I don't think Americans always realize this, there are a lot of countries that are called democracies. They have voting every 5 years or whatever it is, but they are extremely corrupt, and the legal systems, the judicial systems are not independent. The press is not free. And Malaysia is a democracy, but it was a deeply flawed one. There was terrible gerrymandering of election districts. There was lots of money flowing around in cash during election times to buy votes. But despite all of that, and despite the Prime Minister's hold on power through this sort of corrupt electoral system, he still lost because the Malaysian people were so angry about this corruption.
Because
that
it's their money, right? It's their money.
Their money. And
the taxpayer has to pay for that.
And they're going to be on the hook for the money. This money that Goldman helped their fundraise, it will all start coming due. These bonds will start coming due in the next few years. Billions of dollars that these taxpayers will be on the hook for. So they were angry. So they kicked out Najib, and that changed the game. Suddenly, Najib had not been cooperating with the U.S., which was investigating this. The U.S. is interested in this story because the U.S. tries to police corruption. It doesn't want corrupt foreign officials coming and buying assets in the U.S. And Jolo had bought he'd bought a Time Warner penthouse that Beyonce had once rented. He had obviously bought this film company. He bought mansions in L.A. He bought a L'Hermitage hotel in Beverly Hills. He actually bought a stake in EMI Music Publishing. He bought the Park Lane Hotel on Central Park South.
Oh, my goodness.
So all of these assets, the U.S. Department of Justice is now seeking to seize because it wants to send a signal that you don't come to America and buy assets if you're a corrupt foreign official.
Why don't they go to Goldman Sachs and arrest those guys?
Well, Goldman, I mean, we should be very clear. Goldman, no one's saying Goldman was criminally involved in this.
Yeah, that's what I'm talking about.
Yeah, we're saying Goldman was not criminally involved. Goldman raised the money for the fund. But what Goldman did was miss red flags, as in you're not supposed, if you are banking, doing investment banking work for
but when you go from 1 million to 600
million
in fees, they know something's fishy.
Yes, and as I said, there was huge debate inside Goldman about whether they should be doing that business.
Right. So let me ask this quick question about this guy Jolo. Did you mention Chris Christie and all the people he's trying to pay right now to make sure he doesn't get any more trouble?
So Jolo goes to China, and he obviously can't use the American banking system now after all this has started to come. I mean, don't forget, we've been writing about this in the Wall Street Journal since 2015, and that will put him on compliance blacklists. So he can't send money now in the U.S. dollar system. But he seems to still have control of huge amounts of money, and he's been using front or cutouts, friends of his, to pay his lawyers. And he's using a law firm called Schillings in the UK. He's using Cobra and Kim in New York. And he seems to still have access to quite a lot of money. He's also paid Chris Christie, as you mentioned. Chris Christie, I think, Chris Christie's firm was hired to try to fight the asset seizure.
Chris Christie was the governor of New Jersey.
Exactly. And also
the most corrupt state in America.
Also has a firm. And so, Jolo has been trying to fight the attempts to take the assets back in the U.S.
And he hired Chris Christie's firm to fight that.
And he also hired another firm owned by a Trump lawyer, and he hired Elliot Broidy's wife. Elliot Broidy is a Trump associate who was trying to lobby the Department of Justice to get them to drop their investigations into Malaysia in return for payment from Jolo. So he's been doing all of that, which is, in The Great Gatsby, there's a great line where Gatsby is described as one of the most optimistic men I ever knew, and I think that's a way of looking at Jolo. You or I, or your listeners probably, if we were in all this trouble for financial malfeasance, and it had gone on for 3 years, we'd probably just give up, right? Whereas Jolo is there in China,
he's still
trying
doing
to make
it.
New connections, still doing it. And the latest part of this is, our book, which $1 Billion Whale, which came out on September the 18th. There was a huge attempt to stop its distribution around the world.
Really?
Jolo's lawyers sent letters threatening independent bookstores and other distributors saying, if you even stock this, you could face a libel suit. But, we've gone ahead and we've been able to distribute it anyway.
Are you concerned about your life or things like that?
No, I'm not. I mean, this is we just write what we find out, and we put it very fairly, and we always give everyone fair chance to comment, and we're very, this is the Wall Street Journal model of writing about material we come across.
So as this develops, what should we be looking for? Should we, as you said, Goldman is now being investigated.
Yes. The key thing here is, there was a very good book last year written by a reporter called Jesse Eisinger called The Chicken Shit Club. And I'm sorry if I don't know if you're supposed to swear on
it's
your
quite all right.
show or not.
I don't swear at all. I'm politically correct. Yeah.
But it was, that was a phrase that Comey had used to describe, the lack of willpower at the Department of Justice to go after big cases.
Oh, amen.
Right? And, I mean, part of that's to do with the revolving door between big law firms and
lobbyists and all those guys.
And so I think one thing to look for here is what happens in this case. Is who's held accountable and how, and is it just, are people just given a slap on the wrist and a big fine, which, a couple of $1 billion of a fine might sound like a lot of money to you or I or your listeners, but really, it's an operating cost for a big bank like Goldman.
So let me ask you this, because we're running out of time there, Tom. What lessons would you want to impart to our listeners right now? Because this thing about banks getting minor slaps on the wrist, like same as Wells Fargo, for setting up those little minor bank accounts, it's just standard operating procedure. Nothing really happens. So what lessons from your view of the world, working at the Wall Street Journal, what message can you pass on to our listeners?
Well, that if you commit a white-collar crime, you pay the same kind of sentence. You face the same kind of sentence.
But what was
other kind of crime.
What was that? You had a quote in the front of your book that by Bob Dylan: "If you steal a little bit, you go to jail, and if you steal a lot, you become king," or something.
Yeah, exactly. It's a Bob Dylan song lyric, and that's the case, right? If you're a small-time criminal, you do go to jail, but if you do a white-collar heist of billions of dollars, perhaps there is no criminal case against you. It just becomes an institutional case. Goldman's line here is that, well, look, we didn't know what the fund was going to do with the money we helped raise, and for plenty of people at Goldman, I'm sure that's true. But what the Department of Justice is doing is looking into who knew what.
Yeah, and that's interesting you say that, because there were red flags, and I think you mentioned in your book, we were just in Australia, and Turnbull, who was the Prime Minister, was just not reelected. But you said his son, I don't know if he worked for Goldman, but his son, Turnbull's son, raised the question: how come we're making so much money from this one fund in Malaysia?
Yes, Alex Turnbull was a Goldman employee in Hong Kong. He didn't work on the deal itself, but he heard about it, and he said, well, why were we making so much money? And lots of people in Goldman knew that.
So was it a matter of greed?
Yeah, I think
Pure greed.
So. I think there's greed there, and you could turn a blind eye. There's willful ignorance. But what the investigators have to get to the bottom of in America is what was willful ignorance, right? And, sending money into Swiss bank accounts and charging too much, and what was, and also, by the way, ripping off your client. Goldman for sure ripped off the Malaysian fund that they worked for.
That's the standard operating procedure. Weren't they caught trading both sides several times? Right,
exactly. So that's more, I'd say, clear cut. I'd be very willing to say on your show, and just did, that they, they ripped off their client. But what's going to be interesting here is, what did this banker Tim Leissner, the Goldman partner who was really on the deal, what did he know? And, after he left Goldman...
And he was in Asia at the time.
Yes, and knew Joe Low and spent a lot of time with Joe Low. And when he left in 2016, as I mentioned earlier, he tried to set up he tried to help Joe Low buy a bank in Mauritius. And this is at a time when it's all come out, when the news has started to come out, and Joe Low can't use the American banking system. So there's a lot there we don't know yet. And why was he doing such deals?
Anyway,
this is
Mr. Tom Wright, thank you very much. The book, again, is The $1 Billion Whale. It's better than any
Any TV
fake
show
novel.
you're gonna
This is a real novel.
thrilling.
And how a 27-year-old kid can be the biggest bank robber possibly in world history. And it's ongoing today. So thank you for your conscientious reporting.
Thank you. It's a true crime thriller. You know,
It is.
Oh.
It has the finance lessons, but it's really a thriller. So,
But I tell you what, tell you money can buy you anything. There's a picture of this fat little Asian guy with Paris Hilton and all that. You go, holy
Who he
man.
paid for? Who he paid? He paid
Who
to
in the
show
world?
up.
I mean, you go, yeah, money can't buy you love. Well, it can buy you an escort for the day or something.
Tom, thank
Buy
you
you a
for
lot
your
of things.
thank you for your great work. We appreciate it.
Thank
Thank
you,
you.
Tom.
Thank
Thanks
you.
for having
All
me
the
on.
best to you.
And we come back, we're going to ask Robert.
You're listening to the Rich Dad Radio Show with Robert Kiyosaki.
Don't be like Charlie. Charlie is that do-it-yourselfer who does himself in. Do-it-yourself is good for tile and grout. It is not good for asset protection. Charlie thought he'd save a few dollars forming his LLC online. With no guidance, he did it wrong. When he sold the property, he lost thousands and thousands of dollars. He did himself in by trying to do it himself. Don't burn yourself. Use Corporate Direct to set up and maintain your LLCs and corporations. Corporate Direct is owned and operated by attorney and rich dad advisor Garrett Sutton. Garrett wrote the bestsellers Loopholes of Real Estate and Start Your Own Corporation. He is Robert Kiyosaki's attorney for asset protection. He and his team will do it right. Visit them at corporatedirect.com or call 800-600-1760. Mention Rich Dad and receive $100 off your formation fee. That's corporatedirect.com. corporatedirect.com.
Financial freedom begins with financial education. Now back to Robert Kiyosaki and the Rich Dad Radio Show.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And you can listen to the Rich Dad Radio program anytime, anywhere on iTunes or Android. And all of our programs are archived. We archive them because one of the best ways to learn is via repetition. You go to richdadradio.com and pull up this interview with Tom Wright, because you listen to this again, you'll learn more. But if you have friends, family, and business associates, listen to it and discuss it. This is a very important show because you'll find out what's really going on in the banking system. That little friendly neighborhood bank on the corner over there is not really good for you. It's not good for you. So that's what this show about J-Lo or Jolo was about. How did a 27-year-old chubby little Chinese kid from Malaysia, Penang, rip off billions of dollars? And you're going to find out what motivates the bank to get sucked into this. Questions, Kim?
Well, the name of the book is $1 Billion Whale, and it's a true story and based on two very, very smart journalists of the Wall Street Journal. So I highly recommend it. If nothing else, it's going to be entertaining. And I'm really interested to see what happens. I mean, this guy Tim Leissner, he's a key player in this thing.
He was a Goldman associate out in Malaysia.
Yeah, and he worked very closely with Jolo. What's going to happen there? What's going to happen with Goldman?
Ladies and gentlemen, I have a new book coming out. It's called Fake. It's fake money, fake teachers, and fake assets. And what we're hitting on in this program here is what really goes on behind the scenes while you're sitting there, walking to the bank, checking out a credit card, putting money in a checking account. Your wealth is being ripped off. So the book is called Fake Money, Fake Teachers, and Fake Assets. Because that's why we had Tom Wright on this program to promote his book, $1 Billion Whale, and the story is still unfolding. The best part is to check out this little Asian guy with his hot blonde. Well, that's kind of like me. It's kind of like Kim and May. But anyway, this was Paris Hilton, Kim. You're much better than she is. Okay, that's first question, Melissa.
So this question is from Amber in Denver, Colorado. Favorite book, Rich Dad Guide to Investing. Robert, how do banks make their money, and do you see a collapse coming in the banking industry?
That's a fabulous question. Once I'm going to shamelessly pump my book Fake is because that's why the Rich Dad Company was founded years and years ago. Well, 20 years ago. But my search began in 1983 when I read the book Grunch of Giants by Buckminster Fuller. And Grunch was about how the ultra rich people we never see are ripping us off every single day. And more books are coming out, like The Creature from Jekyll Island by J. Edward Griffin and The Road to Ruin by James Rickards. More and more is being disclosed. So will it crash? Probably, because it's so corrupt. But if you read Rickard's book, if you read Griffin's book, The Creature from Jekyll Island, this is part of the process. What they do is they create all these huge loans. The thing crashes. It happened back in the savings and loan crisis in the 80s. It crashes, and you and me, the little taxpayer, pays the debt, and the bankers run off with the money. So this is not a new phenomenon. Once again, that's why the Rich Dad Company was created, because this is kind of my study. So the question is, how does the banking system make money? They don't make any money on your savings. They could care less about your savings. What they want is a word called fees, F-E-E-S. Mutual funds are probably the worst, the most blatant fees. They're so loaded with fees. You don't make money, but they collect their fees. And there's better ways to do it than
if you can
funds.
Actually lose money, but they're still going to make money.
Of course. So what Tom Wright was talking about here was when they went, so Goldman went to Malaysia, they said, we got this guy, Najib, the prime minister, and he'll play ball with us. We can raise all this money, and the people of Malaysia will be on the hook. When it collapses, they'll still be on the hook, which is collapsing right now.
And they're going to be on the hook.
But Goldman Sachs runs off with $600 million. And as Tom Wright says, a normal transaction like that would be $1 million. But these guys took off $600 million. They'll never be prosecuted for it. Never.
And, we were talking at the break about, and I look back now and I go, oh, my goodness, I didn't see it then by any means. But the U.S. was getting more and more regulated, and these banks were getting more and more regulated. So they just did the same thing. They said, let's go to emerging markets like Malaysia. We can do it. We can do the same thing there without the regulation. And so we were talking about.
If you're paying attention right now, Argentina's collapsing because that's what happened.
Same thing.
Guys like Goldman went to countries like Argentina. They suck all the money out. Now the country's going to collapse.
Yeah, and we were talking about all the CNN, CNBC, all the bubble news, they all talked about emerging markets. Yeah. It's all emerging markets. We're going to emerging markets. It's emerging markets.
It's such a lie.
And they're just doing the same greedy thing and ripping off all these people in all these other countries.
And that's why there's no financial education in schools, because if people have no idea what's going on, they can take your money. So I'm not saying get your money out of your 401k IRA and all that. All I'm saying is that the reason we have the Rich Dad Radio Show is to give you some insights as to what's really going on behind the scenes. So once again, fees are the name of the game. When you buy, let's say, a timeshare, they could care less about that piece of real estate. What they want are the fees. You will pay fees for the rest of your life. Those are the three letters, F-E-E. Fees. And that's how they make their money. It's called assets under management.
Yes.
Assets under management. Oh, good. We have $1 trillion asset under management. That doesn't mean they're successful. All it means they're making a lot of money on fees off of your money, even though you're not making any money. Ladies and gentlemen, please pay attention. When your financial planner tells you to give them the money, put the money in the bank, do you think they really care about your money? No, they want the fees. They want the fees from your checking account, your credit cards. They want fees. They're not a friendly little banker. They provide a service, true. But it's getting so bad right now. Your wealth is being sucked out by the banking system. Your wealth is being sucked out by the monetary system. And our education system is in compliance with it. They're complicit because there's no financial education in schools. And everybody goes, the teachers are such wonderful people. And they are good people. But they're keeping you blind because they do not really educate you. Next question, Melissa.
Our next question comes from Jameson in San Jose, California. It says, Robert and Kim, I'm sure you get approached often by people who are looking for you to invest in them or with them. What are some of the things you look for in vetting an investment or business partnership?
That's one of the toughest questions you can ask.
Yeah,
right?
It's a complicated question.
It's not a yes or no answer. The biggest mistakes Kim and I have made is we've invested with uneducated people with a good idea. You look at Shark Tank. I wouldn't touch most of those guys. You know why? Because they don't really know how to make money. And I was in that position at one time. People who invested in me took huge risks, and I lost that money. So that's why today I'm much more cautious about when people come up to me and ask me for my money, because it took me a long time to pay that money back. But also I learned a lot. Like I have a couple of friends that say, oh, but we're friends. I say, yeah, I want to keep our friendship. Then we lose our friendship. But these guys have no financial experience at all. They don't have any idea. They don't know how to run a company. They don't know about taxes. They don't know how about debt. They don't know about markets. So at this stage of my life, I'd rather hang out with the Rich Dad advisors like Ken McElroy and Andy Tanner and all that, people who are professionals in what they do. Now, you can, friends and family are another thing. But you'd be very, very careful because just because it sounds like a good investment doesn't mean the person's a good investor. Comments, Kim?
Or that the person's a good person.
Right.
So it takes time. Don't rush into things. I think the biggest mistake we've made is trusting people who were not to be trusted.
Yeah.
And that takes time to develop and to understand that relationship. So take your time. Don't rush into any investment.
Yeah. Be very, very careful. Thank you for all your questions. You can submit your questions to Ask Robert at Rich Dad Radio. Thank you to Tom Wright, and thank you all for listening to the Rich Dad Radio Show.